combination of Blanket, which is the diesel engine that sort of provides the cash at the moment, plus the racehorse, the Bilboes, fundamentally transforms Caledonia and will catapult us into a very different bracket in terms of being a gold producer.
Hello, you're watching Proactive. I'm joined by Caledonia Mining CEO Mark Learmonth. Mark, very good to speak with you. Could you start by providing a high-level overview of the transaction, please?
Yeah, so we did a convertible loan note issue in the States. The gross value eventually was $150 million. We'd increased it from $100 million at launch because of the strength of demand. And the key elements of the bond are it is convertible at our discretion into shares, or we can take it out for cash in 7 years' time. It's a seven-year note. It's got a coupon of 5 7/8%. But what's important in it is we put in an interesting little feature which effectively increased the conversion price. So the standard conversion price would have been a 25% premium to the share price at issue. So that would have equated to a conversion price of about $40 a share. We put in place a derivative structure which has allowed us effectively to increase that conversion price to a premium of 75%, which is just over $50 a share. And so what it's done effectively is, by issuing a convertible instead of doing straightforward equity raise, if we'd have done a straightforward equity raise, the potential dilution might have been sort of 4.7 million shares. A straightforward convertible with a 25% premium would have had dilution of 3.7 million. But by putting in that derivative structure, the potential dilution is now 2.7 million. And that's really important given for a company like ours, which, with a significant growth trajectory, we think our share price will increase very, very substantially. We don't want to be issuing equity referencing our current share price. So that's a headline of the that's a quick overview of the convertible that we completed.
Mark, you mentioned in the release that investor demand exceeded $600 million. Could you talk a bit about the main factors behind this demand?
Yeah, it was extraordinary. We had 12 hours of intensive marketing, and during that period, we had a book of about $640 million. So we were selling at the rate of $30 million an hour, which is fantastic. There were three recurring themes through all of the meetings. The first was a discussion about Zimbabwe as an investment destination. It has challenges, but I think what's very good about this whole exercise is that blue chip convertible investors in North America and a few in Europe got comfortable with Zimbabwe risk. The second area of focus was on our existing operation, Blanket Mine, because clearly we need that to generate the cash to pay the coupon on the loan note. But finally, and probably most important, it's the equity upside potential arising from the Bilboes project. So those three were pretty much recurring themes throughout all of the meetings, and very pleased to see such an extensive high level of demand, which flowed through into pricing and increased deal size.
Could you give us a summary of the four-part funding strategy you have in place for the Bilboes gold projects?
Yeah, so we put an RNS out. We've already alluded to this previously, but having sort of completed the first two planks of it, we felt that it was appropriate now to put more information out on it. So I'll approach it chronologically. So the first thing we did, we published the feasibility study on the 25th of November. Pretty quickly after that, we entered into a series of hedges whereby we hedged production at 3,000 ounces of gold a month for the whole of 2026, 27, 28 at a price, locking in a minimum price of 3,500. Now, the relevance of that is that clearly the gold price now of 4.5, those hedges onto the money, and we accept that. But the point is, it links into another element of the funding package is the interim debt, which I'll come to in a minute. So those hedges, even though they're out of the money, were important. I'll come back to that in a minute. The second thing we've done is clearly we've done this convertible, which I think realizes us about 130 net. Then the third thing we're doing links back to the hedges. Is in November we launched a process with half a dozen Zimbabwean and South African commercial banks to raise an interim debt funding facility of about $150 million. And the critical thing about that is that to maximize that level of interim funding, the lenders need reference to a floor, a guaranteed minimum floor price for gold. Otherwise, they'll just use their own forecast, which will be considerably lower than 3,500. So the point of the hedges is, even though they're out of the money, they do underpin the level of interim funding that we're looking for. We've been very, very surprised, very pleasantly surprised by the strength and depth of demand from local Zimbabwean banks and from some of the South African banks to participate in that. And the point is that the convertible 130 million net plus the interim facility gives, and the ongoing cash generation coming out of Blanket, gives us immediate liquidity to be able to start to place orders for long lead time equipment. So currently we're going through a front-end engineering design phase where we're converting the feasibility study into technical drawings. Pretty quickly in Q3, we're going to start to need to place orders for the long lead time equipment so that there's no delay in the implementation of the project. And then the fourth element, sorry that I digressed a bit, the fourth element of the funding package is a traditional project financing, which will take quite some time to arrange. It might take a year or so to arrange. So that probably we wouldn't get our hands on that until 2027. But we've already got ourselves the liquidity we need in the intervening period to make a start on the project. So that's outlined in the RNS we put out this morning. It's consistent with what we said previously, but there's just more context and more colour on that.
Mark, what's the next key milestones?
I'd expect that in the next couple of weeks we'll announce the appointment of lead managers in Zimbabwe to bring this interim funding home. And then you're going to see the just further news flow relating to the progress on the Bilboes project, and also look out for some exploration results coming out of Blanket and Motapa, again, which we flagged in the past, but we should be looking at some exploration results for those, certainly in the first half, and I'd hope towards the end of the first quarter.
Mark, could you talk about the importance of Bilboes for Caledonia and Zimbabwe?
Oh, well, for Caledonia, it's absolutely critical. I mean, the Zimbabweans refer to gold production in tons, not ounces. So Blanket currently produces about 2.5 tons of gold a year. Bilboes will be producing something like 6 tons a year. So it's a very significant increase in our production. The other thing about the Bilboes project is it's much lower cost than Blanket. Blanket is a somewhat old mine. It's a deep level mine, so its cost base is, all-in sustaining cost is about $2,000 an ounce. The Bilboes all-in sustaining cost is just over $1,000 an ounce. So the blended average will bring us back to a very, very competitive all-in sustaining cost for the group, and that translates into very significant cash generation, certainly at this gold price. So combination of Blanket, which is the diesel engine that sort of provides the cash at the moment, plus the racehorse of Bilboes, fundamentally transforms Caledonia and will catapult us into a very different bracket in terms of being a gold producer.
And how about the importance for Zimbabwe, Mark?
Oh, it'll make a very significant difference to Zimbabwe. We believe this is the largest gold project ever in Zimbabwe, and it will make a very substantial. It will substantially increase the level of foreign exchange earnings for Zimbabwe and sort of tax payments, both royalties, income tax, and payroll tax. But I think on a broader perspective, all of that's great. But on a broader perspective, and the fact that we're now mobilizing international capital markets to invest in Zimbabwe, I think on a broader basis, this project will also place Zimbabwe back where it belongs, which is as a viable investment destination for gold and other commodities as well. So we can't underestimate the effect this will have on both Caledonia and Zimbabwe.
Mark, I hope you'll keep us updated on progress across all your operations. Thank you very much for your time today.
Thank you.
That's Mark Learmonth, the CEO of Caledonia Mining.